Welcome back. A whole host of chemical companies reported their export data for the month of October and November. Sonal is here to decode those numbers, and she's also done some analysis. Sonal?
Well, it's largely a mixed picture, and this is a note from BNK where they have picked up this data as far as exports of some chemical companies are concerned. For SRF, it has been a mixed bag because their specialty chemicals did well, where it was a 45.5% growth on a YOY basis, but refrigerant sales, that were down 45%, leading to an overall growth of 19% on a YOY basis, but they were down 11% on a month-on-month basis. So there has been a decline on a month-on-month basis as far as exports are concerned. For Navin Fluorine, yes, sales were up 83% on a YOY basis, 42% on a month-on-month basis, but weakness was seen in the base business. So if we remove the impact of the Honeywell deal for HFCs, that is hydrofluorochemicals, the base sales are at 61 crore rupees, which is actually a decline of 16% on a YOY basis. So that does not look good for the company. CRAMS revenues are 13.5 crores in November 2022, which compares with a guidance of the company at a quarterly run rate of $10 million. So it looks like it is way away from those targets of $10 million in terms of quarterly sales for the CRAMS business as well. So for Navin Fluorine, it has been a weak set. Neogen Chemicals, surprisingly positive this time around. November plus October sales for them was up around 95% on a YOY basis, 63% on a sequential basis. PI Industries, their export business has always been very strong, and this is not any different in October and November. 57% growth on a YOY basis, and company has started exporting to a lot of other South Asian countries like Vietnam, Taiwan and Indonesia as well. Deepak Nitrite, after the weakness that was seen in the first half and the quarter gone by, yes, there is an uptick. Volumes are up 39% on a sequential basis, that is October and November. These are all export numbers. Atul Limited saw poor show in export markets both on volume and value basis. Sales for October plus November have been declining. They are down 9% YOY, 24% sequentially, and there's some realization in some of their products have also declined by 15 to 20%. Lastly, Aarti Industries, where they saw weak October but pick up in November. So their sales were up 23% on a YOY basis, and they were down 2% on a sequential basis. That is 23%. That is not 235%. So that is about Aarti Industries.
Okay, thank you very much for that. Let's get to our Midcap Spotlight segment. Vivek is here, and he's going to be focusing on a midcap stock that's reacting after Nuvama initiates coverage with a buy rating.
Well, good afternoon. A very interesting note by Nuvama on Sterling and Wilson Renewable Energy, not a stock that we talk about too often, but a very interesting note. Remember, Nuvama is the only brokerage that now has initiated coverage on this particular name. And so what is it that they've done? They've gone ahead and initiated coverage on the stock. They've given a buy rating, and they've kept the target price at 454 rupees a share. So how are they valuing the company? They're valuing the company at 6 times forward FY25, EV to EBITDA. And this, they say, compares favorably with, typically where global peers trade at 8 times. They believe that the discount that they've given actually captures in some of the worries that the company already has. But what is it that is driving their, buy stance as far as Sterling and Wilson is concerned? Number one, they believe that with the change in parentage or with the change in the ownership structure, they believe that the company sits at the fulcrum of Reliance's new energy plans, and they believe most likely, Sterling and Wilson will be getting the potential 20 to 25,000 crore orders as far as the solar installations are concerned. Also, they believe that the company's order book is poised for a V-shaped reversal as far as the last 2 years, which were a downturn, was concerned. What is it that they're saying? Globally, they're saying that the solar PV, order wins or capacity is poised to more than double as far as 2026 is concerned. And they believe that, the company is sitting right at the center of it, and they believe they can really benefit from this particular order uptick that can be witnessed on the back of that. Also, what they're saying, global solar capacity growth in excess of 15% CAGR is what is expected to be witnessed, and given the fact that the company enjoys inherent advantage of lowest solar EPC cost, they believe that the domestic solar capacity also can increase significantly. One more trigger that they believe that Sterling and Wilson enjoys. Lastly, what they're saying, recently order wins have started coming in. So orders worth almost 2,200 crores from NTPC, and an MOU signed for Nigeria project is something that also bodes well as far as Sterling and Wilson is concerned.
Thank you very much for that. With that, we've run out of time on Midcap Radar Mutual Fund Corner when we return.